Welcome to the trading game. We're doing a tutorial on divergences in trading, and Mason is going to step us through some of the stuff that he uses. He's got an indicator that he uses, and he's going to kind of go into detail on how that works for him. So take it away, Mason.
All right, good morning, folks. I thank Mark and the team here to give me a chance to show this. I find great confluence with divergences, looking for divergences when I'm also mixing that with ICT 2022 mentorship concepts for entry points. This is not a type of trading style that you can just depend on. As with any kind of trading style, it's just for adding confluence to my trades uh, for confidence that what I'm seeing could come to fruition. So I will go over the different types of divergences. I'll also send this PowerPoint presentation to Mark and the PDF of the cheat sheet, so we can put that in the trading book of information for folks so they can go out there and grab it.
Perfect.
All right. All right. So, um, different types of divergences. First one we're going to go over is regular divergence. Regular divergence can be considered the beginning of a trend reversal pattern in a bearish or bullish trend. Um, I have found that, and also any kind of teachings you see on this, these are found to be much stronger when you reach an area of support or resistance on a higher time frame chart pattern. Again, if you try to trade every divergence you see, you will blow up your account. These are only really strong when you're reaching those higher time frame support and resistance areas, external liquidity areas, things of that nature. So keep that in mind when we're going through this.
Got it.
Hidden divergences. Hidden divergences are harder to see. They are trend continuation divergences. So the trend is your friend until it is not. That whole concept, I'm sure people have heard that over and over again in their when they're looking through literature. While you're in a trending market, up or down, a hidden divergence can present itself to give you confluence that during a pullback, the pullback is finding less and less strength, and you're going to see a continuation of your trend. Then the third is exaggerated divergences. Now, these are more difficult to see. Well, they're not more difficult to see, they're less commonly found. This is considered to be a weaker type of regular divergence that you will see in a trend reversal pattern. So if you're coming into a higher time frame point of resistance or support, and your lows and highs of your price are making equal highs or equal lows, and your oscillator of choice is making lower highs in a bearish market or higher lows in a bullish market.
And
I'm sorry, in a bullish trend reversal.
just to clarify, the blue line is price, and the red line is your oscillator.
Correct.
Okay.
Yes. The blue line is showing your price and what price is doing. So if you're uptrending in a market and you're making a high, a low, a higher high, but your oscillator is slowing down, that's telling you the momentum of the buyers to push price up is starting to slow. They're getting weaker. Um, so if you were coming in, and we'll look at some charts too. I've got some ideas on charts I want to show folks. But as price is coming up into a higher time frame PD array, or drawn liquidity, or a fair value gap that could be bearish, price is making a high, a low, a higher high, but then you look in your oscillator and you're making lower highs. That shows you that the trend is exhausting, and you're either going to get a pullback or you could get a full trend reversal. Same thing with the bullish nature. If you're coming down, if you're downtrending into a higher time PD array, fair value gap, support, and your lows are making lower lows, but your oscillator of your choice is making higher lows, the divergence of the price and the oscillator is coming towards itself, it's usually a rebound, pullback, or a complete trend reversal.
Whoa.
It'll be easier to see these on charts once we go through them. I'm just going over the basic ideas of these. And at the end of this, before we go to the charts, I'll take any questions too.
Yeah, Yama had one about adding an indicator. There are different oscillators you can use, like the RSI, MACD. He's got one that's specific to what he's doing, and he's going to cover that.
Yeah, we'll go over the oscillators. Any one of them can be used. The one I use is a one that's I'm used to using it because I came from my crypto days. But we'll go over those different oscillators. Okay, so regular bearish divergence. When there is a spreading divergence between the highs being created in price and the highs being created in your oscillator of choice. In the right market conditions, you begin to look at this as a bearish trend reversal, causing price to pull back or to go into complete reversal. Again, these are, when I say right market conditions, higher time frame, PD arrays, draws on liquidity, taking out sell side liquidity, buy side liquidity.
Okay.
Regular bullish divergence, as we kind of discussed already, when there's a tightening divergence between the lows of your price and the lows of your oscillator. You can look at this in a higher time frame market condition if you're reaching support. You can look at this as a bullish trend reversal, or at least a pullback on the charts. Hidden bearish divergence. So in a downward trending market, if you're making lower lows and lower highs, during a pullback, when you think that this price could turn around, price will start making highs and lower highs in the downward direction, and then the oscillator will begin making higher highs. So buyers are stepping into the market to try to push price up, right? They're trying to push price up. They can't make a higher high. The momentum of them is getting higher, so that means they're weakening because they can't push the price higher than the previous peak. Then you have a continuation of the bearish nature of your current trend. Same thing for hidden bullish divergence, and I have two on the charts. I have two of these during a market maker model that played out to show you continuation as well. But in an upward trending market, there's a spreading divergence between the lows in the price and the lows of your oscillator of choice, whether it be RSI or MACD, or we'll go over those like we discussed. But sellers are stepping into the market to try to push price down. They want to reverse this. They want to sell. They want to go bearish. And as they push price down, they cannot create higher or lower lows in the price, but the strength of them pushing it down is getting stronger, and they can't push price down. So this is a continuation trend in a bullish market. Like we discussed, exaggerated bearish and bullish divergence, you can find them all over the charts. You want to treat them just like regular divergence. So this is a trend reversal pattern when you're coming into a higher time frame resistance and your price is making equal highs, but your oscillator is making lower highs. That is a trend reversal. Price, again, they're trying to push the price up. Buyers are trying to keep this going up. Buyers are trying to keep the price going up, and they're running out of steam, so price is going to go into a pullback or a complete trend reversal. Same thing with exaggerated bullish divergence. Your lows are making equal lows into an area of support, and your oscillator is making higher lows. That's showing that sellers are having trouble pushing the price lower than the previous low, and the trend will has a chance to have a pullback or a complete reversal in the opposite direction. So I created this so that people could go back to it and review it over and over again. I've been trading. I've used divergences since 2018, and I still keep my cheat sheet up all the time, just because I want to make sure I don't make a mistake when I'm looking at my divergences. So I always, when I'm trading, I have a screen pulled up with this PDF picture just to remind myself of what I'm looking for.
Right, and I've seen you use that, and that's kind of why I wanted a little bit of description and some notes on it, because when you pull it up, it's just a cheat sheet, but once you stop talking, then we forget, or we'll get them mixed up, or it won't make as much sense. So having this kind of documented to where we can go back and take some notes and reference a little more information, I think will be helpful.
Yeah, absolutely. And I want to stress that when you see divergences in perfect market conditions, when you see the divergence, after the fact, you'll see, oh, look, I could have entered deeper. Don't do that. Do not trade divergences unless you like the YOLO, where you're coming into, let's say you're in a downward trend, right? And price is coming into a higher PD array, and you're making lower lows, but your oscillator is making higher lows. So you're like, oh man, this is going to turn around. We're going to go to the moon. It's going to go to that higher time frame buy side liquidity after it just took all this liquidity. So I'm going to enter in right now, hoping so I can catch an extra 5 handles. Can it work? Sure. Will you get wrecked on the way? Absolutely. Trust me. In my in my limited experience in trading, but coming from the crypto market, I got wrecked pretty hard in 2021 due to just looking at divergences. It's great whenever you're in a trend, but when you're in a trend reversal and they want to keep on going to the other side, you will find out very quickly how much money you can lose.
Yeah, let's not do that.
Okay, so far, are there any questions on this that I can go over again? Feel free to type them out in the chat or unmute yourself, because I know it's easier to ask questions verbally than typing it out.
I got a few people muted. I'll unmute them. All right.
Okay. Doesn't look like we have any. I don't see anybody typing, so we'll move on. All right, on the charts. So the oscillator that I use is something called Fu Manchu Cipher B with divergences.
Hang on.
That being said, you can.
I lost your stream.
Oh, okay.
Let me go out and come back in and see if it fixes it.
Good to go?
Yes.
Okay, perfect. Let me pull up the RSI so we can just have that on there as well so folks can see. Yeah, Crack, and the cheat sheet. I'm not lying. I pull it up on my phone. I have it a PDF on my phone that wherever I'm at trading, if I'm looking at a chart, I can pull it up and look at it at all times, because I'd rather be stupid than be wrong. I'd rather feel stupid, like, oh, you know how to do this, but double check my work constantly rather than just depending on my memory from it. So this can work with RSI. Let me see. I'll pull up the MACD as well. This can work with MACD. This can work with RSI. Those are if you're wanting the basic oscillator, I would choose either the MACD or the RSI. The RSI is one that it's easier to kind of look at. I use something called Fu Manchu Cipher B with divergences, and I use a very basic version of it. I'll put the regular version on here. This is his regular version. Now this has VWAP, money flow, RSI, fast RSI, slow RSI, buy dots, green dots, lines, all kinds of junk on there. But if anybody is interested in this, if anybody is interested in using this, I can show you I just break it down just to the momentum waves, which is a calculation of a fast moving divergence between MACD and RSI.
Can you
with a slow moving.
Can you pull up your settings real quick on that, or just show how
Sure.
we would get to that point? I think you showed me, and that's kind of the way I set mine up as well.
So in the inputs, I leave everything check marked up here. Then anything with the MFI, RSI, everything below I uncheck in the inputs. I just leave the WT, regular, hidden divergences checked, but even I turn those off in the style. So in the style, I use background color, WT wave 1, WT wave 2, and then everything else is uncheck marked. Just those two things in the style gets it to this plain Jane looking.
Okay, good deal.
All right, I'll leave the RSI up because that's easy to look at. With Confluence, I can show it on the RSI and on the Fu Manchu. Okay, so I just went back and looked at some of this week and some of the. I cleaned up my chart and took off all the buys and sells and all the other junk that I had on here drawn up and just created a chart we could look at. I do have ICT Kraken Silver Bullet Pro up. I removed all the lines. I just wanted to show the time frames here, so we could. It's easier to look at from a from a time based point of view. Monday, when we came into when I did the live stream on Monday, came into the market and I came in right about 8:30, I believe it was, and folks were on. We were discussing what we were seeing. I have this box marked out because it has deleted from my from the stream, but at this point, this was actually a 1 hour or a 4 hour fair value gap back from like May or June. I can't remember. It's a long time back, and we had not come and tested this price point at any time before this. So this was a huge fair value gap from previous support when we had the pump up to recent market highs. Right after London, price had come into this area and had made a bounce and came back up, and we were starting to curl back over. And I mentioned in the chat, I said, what would be amazing would be, this is a great level for me to look at. What I'm hoping is price drives back down into this area, takes out this sell side liquidity, just run on stops for people that went long here. And I wanted to see a divergence. I wanted to see price making a lower low in the price, and in the RSI or your momentum waves, a higher low. As you can see on.
Are you looking at wicks or bodies, or does it matter?
Okay, so RSI follows the bodies of the candles. If you use RSI solely,
okay.
The Fu Manchu, the fast-moving wave and the slow-moving wave take into consideration the wicks and the exponential 9 exponential moving average subtracted from the 26 exponential moving average. There's a bunch of stuff in it. I look at the bodies of the candles.
Okay.
That's the way I like to look at it. I look from the dark blue wave to dark blue wave and the bodies of the candles. Will I take wicks into consideration? Yes, because like ICT says, wicks do the damage, bodies tell the story, right?
Yeah.
Same thing in your RSI. As you can see, from this price point to this price point, we made a higher low on the peaks, coming into an area that was a huge area of support, I said this pre-market, and then we got the 9:30 open, price shot down, took out stops, and then immediately displaced. And there was quite a few. I know Jackhammer was on the stream, and there was 3 or 4 other people that got into this trade early on the 1 minute chart. Let me go down to 1 minute and take a look. Whoa, what happened? I'm sorry. I don't know why. If anybody knows a way to stop your chart from doing that, please let me know. And also in the 1 minute chart, you can see Confluence here too. You have higher highs or higher lows in your price, and you have lower low peaked in your momentum waves and RSI. So just further Confluence for a trend reversal. Because remember, we have price coming down, making lower lows, oscillator coming up, making higher lows, which is regular bullish divergence, which is our possible trend reversal. And you can see the trade into this silver bullet hour, many entry points right up into here, where we came into a higher time frame resistance before turning it around. That was one call out that I made on the Monday stream that worked out beautifully with, displacement, break a structure, order. You know, this became a breaker block. There might have been a fair value gap in here. I don't know. I don't remember. But lots of areas on this trend up for you to enter in and get, you know, what, 36 to 70, 40 handles in here.
Yeah, it's been sweet.
So that was a beautiful trade. Anybody got any questions on this one so far? Looks like JJH has said something. I use the 50 line of the RSI or the 0 line on AO as well as Confluence for determining certain state of price delivery. Action about the 50 level RSI with price consistently bouncing from that 50 for a specific time frame equals bullish. Action beneath the 50 bearish. If I have an ICT set up and I see RSI bouncing, rejecting from the 50 line, it's at a Confluence. Perfect. JJH, that is exactly what I love to hear about folks that use divergences or the RSI. They have found a way to find further confluence with their trading to give them further confidence in the move happening or taking a trade after the move has happened. Now, I told folks too, now if RSI or if the momentum waves come and break the previous peak and price is going down, this is null and void. It is, you know, it is a divergence until it's not a divergence. Would I ever take a trade here? No. I have been wrecked way too many times thinking, oh, look, higher time frame support, price is coming in down to it. I've got a 5-minute divergence on the price and my momentum waves. Do I take a trade here? Absolutely not. I wait for the expansion, the break of structure, the volume to come in to break what this downtrend, truly break the downtrend before I ever enter a trade. Just taking this on the hopes that it's going to turn around just so you can catch these extra 20 handles, it will hurt you in the long run. Absolutely hurt you in the long run. Do you spend some time on the higher time frame to look for that fair value gap? Sounds like you went back a few months. Yeah, so when I come into the charts in the morning for my trade, I start right around 7:30ish. I clear off everything previous that I had on the charts, unless it's somewhere in the area we have not touched into it yet. I zoom out to the 1 hour, 4 hour daily. I look for daily fair value gaps. I look for sell side liquidity that hasn't been taken yet. I think I've got some. Yeah, I got some daily sell side liquidity that's back from May, I believe. Yeah, May, that we're getting close to. So these are areas of interest for me. So I mark up my charts with daily fair value gaps, whether they're bullish or bearish, 4 hour fair value gaps, if they're bullish or bearish, a long time frame sell side liquidity, buy side liquidity, and then I turn on the Kraken Silver Bullet Pro. I look for London and Asia high, see if those have been taken. I remove those from the charts. Usually like a previous day low could have been lunch side, sell side liquidity, or a previous day high could have been lunch buy side liquidity. I'll just take everything off and then start looking at the charts from there. So that was a trade on Monday that we called out. Now, was there anything after this that I mean, price goes into complete consolidation. Would I look for any divergences in here or look for any kind of trades if I was awake trading this? Absolutely not. We are sitting in, to me, we're sitting in no man's land between two higher time frame supports and resistance, just going sideways. Absolutely nothing in here for me to trade. So then we come into Tuesday. And Tuesday was a great day for trading with ICT and divergences. So we'll come into the Tuesday AM session. We're going to go to the 15 minute, because this is, was it the 15 minute or the hour? We'll check here. Bear with me. Let's go to the 60. Okay. I came in Tuesday morning and I saw that we were pulling into a bearish bearish daily fair value gap overlapped with a bearish 1 hour fair value gap. So I zoomed out, looked at the 1 hour, and the first thing that I noticed was previous peak to current peak was making a lower high. And my oscillator, if we go from peak to peak, was making a much bigger high. So what does this tell me? Coming into resistance, making a lower high in price and a much higher high in the oscillator, or your RSI or Fu Manchu, whatever oscillator you want to use. That is a trend continuation. And if we look at the 1 hour, we are in a downtrend. So I was automatically bearish for the day. I wanted to see, I wasn't looking to buy anything. I wanted to sell because this is a hidden bearish divergence in the trend. Prices pulled back. They tried to pull back again. The buyers tried to come in and force the price up. They exhausted themselves well over this peak. So that tells me, okay, this is a bad day. Bad day for longs. Let's go look for shorts. Let's go back to the 5 minute. Okay. Again, here, so we had the lower high in price, higher high in the oscillator for your hidden, and then we've got here between on the 5 minute, what gave me further confluence, we have a higher high in the price and a lower high in the momentum waves. So what we had here coming into this higher time frame bearish structure, higher time frame resistance, on the 1 hour we had hidden bearish divergence, and on the 5 minute we had regular bearish divergence. This is added confluence. Higher time frame continuation of the trend, lower time frame reversal of the trend coming into a PD array that was bearish. So here I'm looking for shorts. What we had was the beginning of the market maker model for the day, which was another trade. Anybody got any questions on the confluence between the higher time frame hidden bearish divergence and the lower time frame regular divergence?
I think it's one of those things where as we start to try to adapt some of this stuff, I'm speaking for myself, I'm sure I'll want some points clarified. It's just like anything else that we kind of watch. We're going to absorb so much of it, and then we're going to put it in the charts, and we're going to play with it a little bit, and that's when we'll figure
Absolutely.
out how
Yeah, and if anybody has during your trading days, if anybody has any questions, I always, whether I'm at work or at home trading or whatever I'm doing, I have Discord up. Please feel free to send me a PM, and I'll answer you as soon as I can.
Awesome.
So does, with this, if we go down to the 1 minute, I just cannot get my charts to stay with the same time frame.
Hey, Mason.
Yes, sir.
So it looks like the Fu Manchu and the RSI, they're slightly different. At least it's easier to see on your blue one than it is the RSI, at least.
Yeah, the reason the RSI, of course, like it follows the bodies of the candles. RSI does not take into the wicks, but you see, there's so many peaks, right? There's so many jagged areas. The reason I like the Fu Manchu is because it's a smooth line. It's a smooth concept for looking, making comparisons. It's just easier for my eyes to see.
Yeah, for me, I'd want to do yours because I would need an idiot proof. And I'd be like, which peak am I pulling it from on the other one?
Yeah. Okay, so if we move into the 1 minute here, I don't know if there was any kind of. I mean, here's another confluence, even though on the 1 minute, right? You have the 1 minute peak here as we're coming up. You have a higher high in the price, and you're making lowers in the oscillator. Hidden, regular divergence, regular bearish divergence, right? So you have multiple. You can find these on every time frame that you go through just to find more and more confluence for your trade. What did that lead to? On the 1 minute, we had break of structure, probably had, let's see, high, low, higher, high. So this would be a breaker block here. I don't know if we had any fair value gaps, but we traded right back in that breaker block and then began the downward trend of the out through the afternoon that led to the market maker buy model. So let's say you entered this trade and you were riding it down. You see this, you see this consolidation. You see price trying to come back up, and trying to reverse. But remember, if you play at every divergence, because you can look right here, even on this small time frame in this consolidation, price is starting to make lower lows, and it's starting to make higher lows on the oscillator. Right? Oh man, this trend's going to turn around. This is why if you play divergences outside of higher time frame PD arrays, you will get wrecked or you will lose out on the continuation move down. That's why I just highly stress, look for these when you start entering in higher time frame PD arrays, areas of support and resistance, after liquidity has been swept. That whole ICT 2022 mentorship, those confluences along with this will work. So we're riding it down into the lunch hour. Now, if you zoom out, right, we're coming down into some internal sell side liquidity. Is it really higher time frame? No, but it is internal sell side liquidity. At least the way that I look at it. And as you can see, if we stick on this 1 minute, price is continuing to drive down. And what do we see we're making here? We're making lower lows in the price, and we're making a higher move in the momentum wave, coming into some resistance. Is it higher time frame resistance? No. Is it intermediate resistance? Yes. So some validity to this. Once we had the break of structure here, you have an order block. You take it right off the top of that wick, or maybe the body, but wicks of this order block, because that's a low, high, higher, low. So mitigation block, is that correct, Kraken?
Yes, sir.
Okay, mitigation block. And you could enter this trade. Now, here's where Mark and I were actually on the live stream together, and we were trading this on the afternoon. I had entered down in this area somewhere. He came on in the PM Silver Bullet session and entered along in this last leg, and we were targeting the higher time frame liquidity that had been built over the Silver Bullet session, the AM Silver Bullet session. And while we were trading this, I was typing in the chat, this is going to continue up. Not only are we we were discussing the market maker buy model in the chat, but I was also saying, look guys, we're printing hidden bullish divergence all the way up on this. You have peak low to peak low, peak low to peak low. So we have price making a higher low, divergence on the oscillator that you're using making a lower low. That is a hidden bullish divergence, so that's continuation of the trend. Wasn't worried about getting stopped out. Boom, we go up to the next area of consolidation. Price danced around, shot up. Right in this area, price was Mark had entered in somewhere in here, and price started to pull back. And I immediately, when he was talking about, man, is it going to reach up for there? And I typed in the chat. I remember typing it. I said, man, we just printed hidden bullish divergence again. If you take peak to peak, and we take peak to peak, that's again higher lows, lower lows, hidden bullish divergence. And price just pumped. I mean, it went straight to our area and hit our drawn liquidity. We both made out like a bandit on this trade. It was great. We got off the charts. And then if you look immediately afterwards, right, as soon as price comes up into this higher time frame, bearish order block, PD array, fair value gap, it drove down, came back up and retested, and we immediately, on the 1 minute, made regular bearish, hidden bearish divergence. So that would be a small time frame continuation of the bearish trend. Price could not make a higher high. They exhausted trying to sell off into, or trying to buy off into it, and price just went into a went into a retracement and then further down. So this while we were actively trading this day on the charts, talking about it with our trade, there was multiple areas of divergence through this whole coming into the morning market. After we got into the PM session and hit some intraday liquidity and had a stop hunt and then a reversal, just all types of things that I was seeing in the moment to lead me to, I'm not worried about closing my trade right here. I don't think it's going to dump right here. We just printed. It's going here. I just knew it. We were excited about it, and boom, we popped it and made out like bandits on this trade. So this is, and to see, and it's very difficult on the 1 minute time frame to see these coming to fruition if you haven't looked at them constantly like I have. I'm always, say it again.
That's kind of what I was thinking. I was wondering what's a good time frame to start on that, is the 5 minute a little easier to look at, or do you kind of go through all of them just like you would marking up PD arrays? Or are you looking for those?
What I would do for folks that are looking to at least study this, go to a blank chart and look at the 1 hour or 4 hour.
Okay.
And look at ranges. Go to any ticker, anything that you want to look at, and just start looking and marking them out on the higher time frames, and then drop down to lower time frames and start looking for the intraday your support and resistances, and look for the divergences on a smaller time frame, and then keep on working back and back and back until you get to the lower time frames and can see these things building as they're happening. Because if you try to do it on the 1 minute and just take off on the 1 minute and do this, you're going to get hurt. There's so much noise on these lower time frames that unless you have a good understanding, you can start getting smacked in the mouth with it. Like anybody here, anybody learning divergences, right? Even when I was still bullish here, if you're looking at this, you're making equal highs right here, right? On this 1 minute. We all agree those are equal highs. And look what the RSI is doing. It's making lower highs, right? So what do we got there? We got exaggerated bearish divergence coming into an area of resistance. But we hadn't taken out this liquidity yet. Why wouldn't it want to go up here and take this before the move? Why wouldn't the market makers or the algorithm or whatever the hell it is that drives the markets, why wouldn't it want to go up and do that? So if you look at it in the 1 minute, you can find multiple areas during the charts where you're making divergences over and over again that would make you get out of trades. So that's why I say start with higher time frames and then work your way down. Yeah, Oscar, let me pull up those.
I just told him I'd be posting the video. You can go back and watch the video. All your settings are in it.
Okay, perfect. So yeah, I don't want folks to think that this is the end all be all greatest thing in the world that's going to make your trading much better. Start on higher time frames. Mark these out. Look for them. Don't even add them to your trading. Trade the way that you want to trade right now, but then once you've made your trades, go back in your chart and look at these things. Mark them up after your trading is done for the day and say, oh shit, look, there's some divergence there right before we had that break of structure that led to this pullback on the same way up. Oh shit, look, we were coming into a higher time for an intermediate level of liquidity. We had a drive down. We had some bullish divergence here. Let's mark that up and add that to looking at your good trades and your bad trades after your week is done.
Good.
Like I'll show one more. Let's see. Let me go to Bitcoin. So as you guys know, if you've read my little history of Mason, I made a crap ton of money in the crypto market and then lost a crap ton of money in the crypto market. So the way I trade Bitcoin, for instance, so that I can show you this works on any ticker you want to look at. Divergences happen on all of them. Two of the greatest sells and buys that I've made since learning my lesson in crypto and understanding what shorting a market is and longing a market, and not just buying low and selling high and then readjusting whenever the price came back to a point. I mark out levels. So this goes back to what, March of this year. We entered this ranging market for Bitcoin. If you go out on higher time frames, this is a huge level of resistance for Bitcoin. It was the break of the 2020 market for the continuation of the bull run, and then it was the break in 2022 since we've had the downtrend. So just looking at this on the 4-hour chart, I shorted Bitcoin 4 hours right here. We came into a topping pattern. Price was making higher highs. Price was making lower lows. That is bearish divergence coming into a higher time frame area resistance. We had a I remember exact my trade too. We had a deviation above. Once we reclaimed and broke the structure, I entered right here. No fair value gaps, none of that kind of stuff. I just entered a short and I took profit at the 50% mark, and then I took profit when it came down here on the short. Same thing on the way back up. Price kept on making these lowers, highs. I started DCing. I started dollar cost averaging in here on these. Whenever we would come below and then deviate back above, I would buy, and then I longed from here and then held. Took partials here, and I'm still holding on for this mess that we're seeing from the recent news that came out about the ETF. I'm waiting for some divergences or a bull flag. I trade crypto in a completely different way than I trade our futures. I don't. The ICT concepts they could work with crypto, but crypto is a 24-hour a day market. It highly manipulated. And not gonna lie, I'm still a little scared after getting wrecked back in 2021 and the FTX scandal that I got trapped into. But this is the way to do divergences, guys. Go to your 4-hour and look for them. Look for areas of resistance. Look for areas of support. Look for the divergences that start printing. Lower, higher, into an area of support, bullish. You can start doing the.
Go ahead.
I said bull flag. Yeah. Hey, I know quite a few guys that trade bull flags and make money on it, but it's to each their own, right? Whatever works for them and they can do it at a consistent level, make that money.
Yeah, so we've relaxed our stance on that a little bit, since with you and Pump in here doing really well and stuff, you know, having some extra confluences in your trades. That's, you know, I want to win. I'm not so set.
Yeah, and then
doing it a certain way, just win. You know, what helps you win?
What helps you win, and what helps you lose better, right?
Exactly. Yeah.
Yeah. So that's how I take divergences into consideration. That's what I look for whenever I'm trading, along with my ICT concepts. Like I said, guys, back on the futures trade channel, or the futures. Oh shit! Did I just save that? Sure shit did. Okay, here's an example of bad trade. Before we get off, so we were coming down to this. This is Friday. We were coming down into this bullish daily fair value gap that we had not tested before. I'm looking for a long. I'm ready to go long. Everything pointing on this 1 minute, 5 minute was showing lower and higher. I mean, I could just see the reversal pattern coming. I'm like, this is going to be great. Over the afternoon, this is going to go back up and search for this liquidity. I was already drawing out the manipulation legs and looking for forward to standard deviations. I was ready to make a ton of money. I longed and got popped. So, does not work every time, as we all know.
Did you enter
nothing is.
Did you enter on any criteria, or did you?
Yeah, let me removed everything, but so do you remember the can't remember where I entered at. Let's see, in the silver bullet hour. Yeah, I entered in here. So we had a slight break of structure here after the low, a high, a lower low, and I had a I had a blue vector candle breaking this. I looked at this fair value gap. I entered here and got completely wrecked. Immediate down.
Yeah, you'll do that sometimes.
When I journaled this, I took this as I should have waited for a better break of structure. In my opinion, I didn't see the volume coming in to really break this. It was wicking hard. It was an overall bearish day.
Yeah.
What did I think was going to happen in this short period of time frame that would make it come back up here? It was just my confluence was there for the trade. I took the trade. I got wrecked. But there are some things that I should have taken into consideration. Like, I mean, it's just that's
Didn't
a
you have
bearish day.
Didn't you have a little bit of divergence? Pull your mouse to the right a little bit. So, well, yeah. Go left with your mouse. No, just your mouse. To the right. Right. To this other peak right there.
Okay.
No,
Yeah.
those
So
two
here,
peaks those 2 peaks right there. Yeah. And then
yeah.
on the RSI, you're higher high, but you're lower low over here. So should
Right.
that have told you anything, or was it too
Yeah,
late
I mean
by that point?
that's bearish divergence on the very small time frame. That means it's not finding the power to go up.
Right.
Yes, easy to look in hindsight and say, okay, well that wasn't a strong break of structure
But
because
you couldn't
we
have seen
printed a
that.
bearish divergence.
You were already in the trade by the time that top stuff started printing out, right?
No, I entered the trade right here when it came back into this fair value
Oh,
gap.
okay, gotcha. Okay.
Yep.
I see.
And I was immediately wrong, right?
So
Immediately popped right
would
out.
that be a situation where there might have been like conflicting signals to some degree?
You will find that a lot on the 1 minute time frame. You'll
Okay.
find conflicting signals. The reason I was willing to take the trade was we just entered into a higher time frame PD array support that had not been tested before.
Right.
And at 41, 35, 45, we had sell side liquidity taken too. I had those marked on the chart because I think below that's the 41.14. Yeah, somewhere in either towards the consequent encroachment of this daily fair value gap or the 75% of it, there was sell side liquidity taken.
Okay.
And so those things lined up, and I took the trade.
Gotcha. Yeah, no matter how precise we think we are, we're going to lose trades. It just has to be
Absolutely.
to accept
Yeah,
that and
absolutely.
just try to stack our odds where we can, increase our probabilities, and that's what things like this help us to do. So, awesome. We're coming up on an hour. Does anybody else have any questions or anything? I'm going to put this in the recordings. It'll be on my YouTube channel, and hopefully we'll get some more opportunity. Mason was streaming last week and did a great job. Hopefully we get some more opportunities to see you in there as well, and kind of take it from there.
Yeah, everybody, y'all are most welcome. Of course, send me a message on Discord if you got any questions, and when I got some free time, I will answer everybody as soon as I can.
Okay.
I want to be able to, I'm a learning trader. I'm constantly trying to improve myself, and if I can help folks in the same manner to just add a little bit more confluence to their trades, I'm happy to do
block to
so.
my trade yesterday.
Yeah.
I was sitting here trying to fret, and I was looking for any kind of way to get in this trade, and he's like, "There's a breaker block there," and went back there. It was popped into the trade, and bam. Yeah, he's gonna put the
Brini,
PDF too.
Yeah, I'll send everything to Mark so he can add it to the playbook.
Yep.
Thanks, Mason. That was great.
Yeah, absolutely, man. I'm happy to do it. Happy to be a part of the team. Happy that this channel is around for all new traders because this channel is great. And the folks that are new here, I can't tell you how good this channel is compared to other channels where, they want you to pay $5,000 or whatever it is to learn some basic concepts because, they teach because there's no risk.
Right. Yep, right on.
Yeah, and if anybody wants more information about RSI, there is, of course, YouTube is a great. There are lots of folks out there that trade using RSI as added Confluence for their trades. You can go and watch those videos. They can go into much more depth than I go into. Probably a lot more educated than I am on it. So yeah,
I think the
look.
divergence is the best approach for that. I've tried just trading the straight RSI, and it does tell you stuff, but there's a lot of noise in there too, and I just wasn't able to really, there's people that do great with it, but it didn't work well for me. But I did notice that the divergence is a sort of just an extra sauce on the RSI or any kind of oscillator. So that part of it I'm really interested in.
Excellent.
All right, everybody. Thanks again, Mason. Appreciate your time.
Absolutely. You're most welcome.
I'll get this up pretty soon, and hopefully we'll have a great week next week. Okay?
Everybody have a great weekend. Spend time with your family. Walk away from the charts, right?
Yep, I'm about to do that right now.